And I will be answering questions here on X as well, okay? Just put in there, just sending the link out. Hello, everybody. A very, very good evening to you, and welcome to the Federal Reserve interest rate decision live here at Taurex and Atmos. It's very, very good to have you all here. It's late. It's nearly 10 p.m. here in Dubai, but we're covering the event live for you, as well as giving away $100,000 in Atmos funded challenges and 5 lots of 50% deposit bonuses into Taurex. And it is a massive day anyway, regardless of the giveaways. We have the Federal Reserve decision. We're going to be looking at that decision, which is coming out in 18 minutes. So we've got quite a lot to get through in that time. And also, we're going to be looking at covering the whole press conference live, because when you hear what Jerome Powell's got to say, that's really what moves the markets, in my opinion. We're also live on X. So if you see me looking this way, it's because I'm live on X at the same time. Very last minute decision. Probably saw me coming active on the stream before I was meant to, because I was trying to sort out all the tech that was going on. But if you're on X as well, feel free to ask any questions. We've got 50 people on X at the moment, and it's very good to see you all. And I hope you're all doing well. Hope you've had a good trading day so far. It is going to get messy, to be honest with you. It is going to be a massive inflection point in the markets as well. And we're going to break this down in a really, really simple way. We're not going to overcomplicate anything, and we're going to dive into the monetary policy statement from the Federal Reserve, as well as looking at what Powell has to say at the conference as well, which is going to be fascinating. So you're going to have that with me. So I'm going to put Powell next to me, and hopefully you'll be able to hear him. And we're going to cover that live as we go. Normally, we do say hello to everybody who's joined us on YouTube, but we have got a lot of people coming in. It's good to see you all, and I hope you're all doing well. We'll try and get through as many as you can. Before I do that, I just want to make it very, very clear when it comes to the giveaways, because I know a lot of people are excited about the big giveaways. I promised you we were going to have something big for you guys on X as well, and this is it. We're going to give away $100,000 in Atmos funded challenges. The way this is going to work is really, really simple. All you have to do is comment win once. Just once, please. The reason I say that is because a lot of people think that commenting win 1,000 times on the chat means that they have more chance of winning. It doesn't mean that. The only way in which you can win, or more chance to win, should we say, the only way that can happen is if you subscribe to the YouTube channel. My giveaway bot will make it twice as likely for you to be drawn out at the actual giveaway. Now, I'm going to be giving away prizes at random throughout different points of the stream. Normally, I give away the prizes towards the end. Some people said, "Oh, you should give them away because you should give them to people that are watching the whole time." And to be fair, no, you're probably right. Probably should be giving prizes out throughout the different parts of the stream, so it makes people stay on the stream. Yeah, fair enough, fair point. So I'm going to be giving away 5 lots of 10K Atmos funded challenges and 2 lots of 25,000 Atmos funded challenges, as well as the 5 lots of 50% deposit bonuses. Now, if you are a winner, when I draw you out, which looks a little bit like this, okay, you can see the entries coming through. We've already nearly got 100 entries into the live draw. If you are drawn out as a winner, you'll be tagged on the chat. Now, if you're a winner, I need you to message me either on X or Discord that you've won with the prize that you've won. And yes, I will check. So don't tell me you won a prize if you haven't, because there is a way of verifying it. And I will credit those probably tomorrow, because it's going to be 11 p.m. by the time I get off the stream. So tomorrow is probably the easiest way to credit those prizes. So I'll wake up tomorrow and I'll go through the messages, I'll go through the stream again, and I'll just double check to see who won the prize. I'll even probably write it down. Then I'll get the team to credit your prizes, but make sure you're active to claim it. If we don't have prizes claimed, what I'm going to do is I'm going to give them away on X. Okay, I'm going to give away as a random draw on X for the prizes that aren't claimed. So make sure you tune into the streams. And for those who are commenting win on X, come and join me on YouTube, because you're going to be able to actually join the giveaway itself. The guys on X, you know what, maybe in the future, because this is going to be the first. Well, this is the first time we're covering the actual live event itself. But good news is we're going to be doing this 3 times a month. NFP, US inflation. Well, I know the Federal Reserve's every 6 weeks, but roughly at least 2 times a month we're going to be doing this sort of special live stream. Okay, so we'll make sure that maybe we do some prizes for X as well. Okay, but come join me on the YouTube channel. Okay, I've also put a poll up for people what they think is going to happen. 82 votes already in the poll about what the Fed are going to do today. Cut 25, cut 50, or leave rates steady. Have a vote in the poll. Let me know what you think. I'm surprised there's a few people that are voting for leaving rates as they are. I'll be very interested to know why. But anyway, before we do that, as promised, hello to those who are joined us on X, for example. We have got, who have we got on X? We've got Sir Prosper, hello to you, good to see you. Clay Ritas, Sylvie, YouTube, hello to you as well. I hope you're doing well. And Hassan as well, and other 62 people that are on X. It's very good to see you. Now we've got loads of people on YouTube. It's very good to see familiar faces and new faces. Deadly Fun with Sunny, Raz, good to see you. AJ Digital Creator, hello to you. Fatai, I hope you're doing well. Nova, Spectra, Sudeep Forex. Who else we got? We got Raz, we got Fernando, Nova, Nikhil. Hello to you, Nikhil. Always tuning into the streams, Nikhil. I hope you're doing well. Nitin, who else we got? It's gonna be hard to get through all of you. How long we got? 13 minutes of the decision, guys. Remember, I'm gonna be doing a bit of a breakdown. Enough time to give us a little bit of a breakdown. Don't worry. And then we're gonna do more of a worrying about the conference that's coming out, because that's the most important thing, not the decision, the conference. Uzar Ahmad, hello to you, good to see you. Nova, I hope you're doing well, and I hope everyone's had a good trading day. Luffy Peace, IQ Baber. I'm just gonna have to scroll through these guys quickly so I can give you a rundown. Jose Bargav, Ozair, good to see you all. Who else we got? Andrelic, Saint 616, hello to you. Lucky Trader, I see. Jane, Tarun, Imtiaz Nasir, Raz, Kirkton, hello to you, good to see you. Yeah, here we go indeed. It's going to be a big day, big night. Maybe it's morning for anyone who's watching in other places in the world. Crick Mila, hello to you, one of our winners before. Hope you're doing well. Hassan, Deadly, can I get through them all? Technical Gautam, RBFX, Said Niz, Usama. What do we do in these situations? When we've got the Fed coming? It's an interesting question, to be fair. Look, whilst we're here, your entry is done, funded. If you've said win on the YouTube chat, your entry will be there. Don't worry, your entry's coming in. So, yeah, what do we do in these situations? It's a good question. Here's what I always say. I would never place a trade now. We've got 10 minutes till the actual decision comes out. We're going to just take a look at what the forecast is for that decision using our economic calendar over at Taurex. So we've got our economic insights. You can see the impact of this decision. So what I've got in front of you now is typically 4 hours after the event on euro dollar, we see a rough range of around 100 pips. That's quite a big price movement around normally a Federal Reserve interest rate decision. So you can see how volatile this is. Therefore, what to do in these situations is essentially just take a deep breath. If you're in a trade and it's in profit, just look, for me, this is what I would do. I would look to try and move my stop loss to protect myself for any unwanted moves, to be honest with you. Also, what I would do if I wasn't in a trade is I wouldn't place a trade. But if I was in a trade and I'm currently in a loss, if you guys out there are in a trade and you're currently in a loss, look, make sure you're risk managed on the trade first and foremost. Ask yourself that. If you've risked too much and you know it, because let's be honest, we will all know if we've risked too much on a single trade. If you've risked too much on a trade, look, just take some of the loss now and maybe leave a portion of the trade, okay? Or close the trade out entirely if you feel uncomfortable about how much you could stand to lose, okay? That would be what I would do, and that is what I do. Right now, my bots have closed out all of my trades for today. I think we were break even on the DAX bot, and I will be giving you an insight into those bots. I know people who have joined my streams before know all about that. We've got a mentorship coming out and an academy coming out, and those bots are really, really exciting. So I will be showing you a sneak preview of those on Monday's stream. I just haven't got time today. I've got things popping up everywhere at the moment, and it's hard to actually focus on the bots. Okay, just reading some of the comments coming through. If anyone has any questions today, look, please ask the questions in the chat section. I will answer all the questions, well, as many as I can by the end of the stream. Deadly says that only scalpers trade, no smart traders. Did I catch the big move on Friday? Don't trade is probably the best, is what Mark 1590 says. Prop Firms Desk, hello to you, good to see you. I'm going to do a giveaway. I'm going to do 2 giveaways before the federal decision comes out. But let me just quickly look at the forecast. If I go onto the economic calendar and show you what's expected today. And you're probably wondering why, we've got 8 minutes to go and I'm not giving you a full break. Look, what's important today is not the decision from the Fed in terms of interest rates. It's their forward communication on what that means for interest rates going forward, i.e. towards the end of this year for the remaining 2 meetings that we've got after this one. That is what's going to move the markets more than the decision itself. We will get volatility around the decision itself, but not necessarily anything like mind-blowing in terms of direction. It might just be very, very choppy. However, today, forecast is for the Federal Reserve to cut rates by 25 basis points, i.e. 0.25%. That is fully priced into the markets. Okay? That's fully priced in. What do I think is going to happen? I think the Fed will cut by 25 basis points, obviously. That's what I think. I know there's some people actually out there, and to be honest, only 65% of people have said cut by 25. There's some people here who think the Fed are going to cut by 50, and some are going to think that they're going to keep rates where they are. I think they're going to cut 25, but what's important is the language that's used after it. And we'll dive into that as the decision comes out and as we read the monetary policy statement and as we go into the conference, because it's really, really important. However, just a general figure in which we're expecting is a 4.25% interest rate, which is a cut of 25 basis points. What does that mean for markets? Well, let's look at the US dollar. How long we got? 7 minutes to go. Let's look at the US dollar. For those of you who have been on my streams for the last 2 months, would know that we've been breaking down the US dollar in a lot of detail, what that means for gold prices, what that means for the major FX pairs as well. And as you can see, we have the dollar breaking down below this key area of demand that we've been talking about for, I can't even remember how long. It's been a long time. I said to you guys, when we fail to get any bullish momentum from this zone that you see right here, as soon as we failed to get that bullish momentum from this zone and we started testing it 1, 2, 3, 4, 5, 6, 7, there was nothing that was giving me any underlying strength in this dollar market. On X, sorry, can you see? There you go, X, people. I'm on the charts here, as you can see. There was nothing really that was giving us that confidence. So actually my base case then switched from dollar bulls to dollar bears. And as you can see, Tuesday, Monday and Tuesday, they were the big weeks. That's where we saw the big breakdown in the US dollar. And as a result, for those gold traders out there, we saw an absolute explosion in gold prices. And that wasn't really a surprise because we were talking about how, gold was in a consolidation period. You can see all my analysis was there before. And what it was going to take was a weaker dollar, a move lower in the dollar, and we would have seen gold prices surge. That move lower in the dollar this week, and really what's been happening over the past couple of months, and this move higher in gold that you see, is the markets pricing in interest rate cuts for the rest of this year. So when I read the chat and I hear, what was it? I just saw a question on there. Was it by Curtin? If we're expected to cut by 25 basis points, if it's priced in already, how do you see the market initially moving when it's announced? Well, it depends on the monetary policy statement, which is released at the same time, because you're going to have two situations here. Let's assume they cut by 25 basis points. You either got a hawkish cut or a dovish cut. Now, what does a hawkish cut look like? A hawkish cut would basically be a cut by 25 basis points, but the Federal Reserve points to sticky inflation, prices remain high. We're not sure whether we're going to be cutting rates for the rest of the year. We're going to take it steady. We're going to take it slow when it comes. We're going to bring rates down gradually. Those sorts of comments. The economy, we're not seeing comments like we're not seeing too much downward pressure on the economy when it's come to how high interest rates have been. Those sorts of comments, i.e. about inflation, about being bullish about the economy, those sorts of comments, that will be treated as a hawkish cut. And probably as a result of that, we would see gold prices fall a little bit because of the stronger dollar. And we would see gold the dollar itself surge a little bit higher. What does a dovish cut look like? As we've got 4 minutes to go. Now, a dovish cut is essentially where the central bank will cut interest rates, but they'll be quite concerned about the economy and the effects of tariffs on the economy. And if they're quite, because you've got to remember, we've had some weak data coming out. And this is why I'm worried about this cut. And why I'm worried in general. And I've got a fantastic graph to show you later, which shows you what's happened to the stock market off the back of interest rate cuts in history. A dovish interest rate cut would basically look like we're concerned about the economy. All right, we see inflation falling down to target. Now's the time to cut. There's more cuts coming. That sort of thing. Because it's not necessarily that, because if you look at the percentage chance of an interest rate cut today is 94%. However, when we move to October, you can see October and December, the probabilities are a little bit more spread out. So the markets haven't really priced the rest of the interest rate cuts in. Currently, we're pricing in 3 interest rate cuts. If we get a hawkish cut today, expectations of interest rate cuts for the rest of the year to fade back. Dollar will probably get a bit of a rally. Gold will probably fall. Stock market probably won't be too bothered. The stock market is going to move based off of the fact and how Powell communicates about what's going on with the economy. That's how the stock market's going to move. But should we get a dovish cut today, the chances of 2 more interest rate cuts, i.e. in October's meeting and in December's meeting, these 2 meetings, if we start to pricing 95% chance that we're going to see interest rate cuts going forward for the rest of this year, again, I think we see more of the same thing. Gold upside, dollar downside, and the stock market will probably like it as well, as long as we're not cutting into a weak economy. And we'll explain that in more detail. We've got 2 minutes to go, so I'm gonna leave us on a gold chart so we can see the reaction as the interest rate decision comes out. 63%. Oh, should we get 50 basis points, guys? Should we get 50 basis points? Look, this is going to go crazy. Gold will probably moon up to like 3,700 or 3,750 in the next couple of days. The stock market will probably love it initially. There'll be some concern why we're cutting 50 basis points. Are we in a recession? The dollar will probably sink. 1 minute to go, guys. I do wish everyone all the best when it comes to the market, the moves coming out. I'm going to zoom in on this gold chart to see the reaction that we get from the decision, and I'm going to read us through the interest rate the statement as well. How long we got? 10 seconds. 25 basis points is my prediction on X. 25 basis points. Here we go. Here we go. Here goes gold. Gold has surged higher. Initially, I imagine we've just seen 25 basis points. I'm just waiting for my calendar to upload. We see gold much higher, guys. 25 basis points. There we go. 25 basis points is the interest rate cut from the Federal Reserve. We are seeing a dovish reaction. Look at gold. We're approaching 3,700 on gold already. If you are in gold buys, let me know. You can see it on X as well. You can see it on the screen. Gold is doing gold things, to be honest with you. Just be careful. Don't be jumping into trades now. The spreads and the market and the volatility is pretty crazy. I'm going to try and get you the interest rate statement as well. Let's just quickly touch on the US dollar. That's the reaction of the US dollar. There we go. We're seeing a much lower US dollar off initially. This isn't necessarily the move that's going to happen, but this is the initial move. Gold's actually reversing a little bit. We see euro dollar obviously surging higher, pound dollar surging higher. What's happening to Bitcoin? Not too much. The stock market is relatively unchanged, but it's moving higher. Let me see if I can get you guys the statement. What do we think? How's people getting on with that? There we go. Yes, crazy active stuff. Very, very active. This is why I'm coming on to cover these as we go live, because I want to break this down, because I know sometimes we can see a lot of. I'm just reading X comments. Let's go. Data is coming, guys. If you have any questions on X, drop them in, and I'll answer them as well. Sometimes you can tell like it's quite a big thing. Like the markets move quite aggressively, but it's sometimes you have to now take a step back. We've had 25 basis points. Now let's read the statement, because the reason I find this so important is not because I'm trying to make money now. I'm not in a trade. I'm not even interested in trading that. As Uzar Ahmed says, gold prank to retail traders and gamblers. Like this is gambling, guys. If you're trading this, you have to be very, very careful. It's not something that I've ever seen be successful, to be honest with you. But what's important now is if you can break down the statement, you can listen to Powell and what he says, write some notes down, get some understanding of what that means going forward. You can start to then picture in your head after some practice, okay, so the markets are priced in this, but Powell's saying that. Is there a discrepancy here? Have the markets missed something? And that interest rate differentials, especially up between central banks and stuff, that is really where you get the good trades. But some crazy movements on gold. Yeah, you're right. Whoa. We've wicked out both sides and stayed somewhere in the middle. I will answer these questions, guys. I know I'm getting a lot of questions, and I promise you I'm going to try and get through them as quickly as I can. I really want to read the statement because this is really important. I've just had the statement come through, and I want to read it. I want to see. Okay, bring it over. Okay. The dot plot is forecasting 2 more cuts this year, roughly in line with expectations, but that's quite dovish. So that means another 25 basis point rate cut next time in October and in December as well. So we're pricing in 2 more interest rate cuts according to this statement. Let me read it. This is not what I want. I don't want the summary. I want the statement. Here we go. This is really good, by the way. If you're going to take anything, basically, this is an FOMC statement comparison from the previous statement. So where they've added things that are more hawkish or added things that are more dovish. Now the comments in red is where they've added things that are more dovish, and the comments in green are where things are slightly more hawkish. So across the board, it's a little bit of both. But let's have a look. Statements that are removed. Okay. So, although swing in net exports continue to, they've removed that. Recent indicators suggest that growth of economic activity moderated in the first half of the year. Let me see if I can zoom in on this, guys, so you can see it a bit clearer. It's not there. There we go. The unemployment rate remains low, and labour market conditions. That was what was said before. What's been added is job gains have slowed, and the unemployment rate has edged up, but remains solid. And they've added low. Inflation has moved up and remains somewhat elevated. They've added that to their statement from previously. So they basically said the economy and the jobs market has moderated, but prices have moved, or inflation has moved higher. Stagflation, that is. It's not the best thing in the world, to be honest with you. Don't need to worry about that. In support of its goal, and judges that downside risks to employment have risen. Downside risks to employment have risen. In support of its goals and in light of the shift in the balance of risks, the committee has decided to, obviously, this is the first interest rate cut we've seen since July 2024. They decided to lower the target range for the federal funds rate by 0.25%, blah, blah, blah. In considering the extent and timing, we will assess incoming, assess incoming data. We know about that. The committee will continue reducing its holdings of treasury securities, blah, blah, blah. We don't care about that. Okay. Just reading some of the chat. No, I wouldn't say it's this isn't recession. This isn't recession. This is just a nod to the slightly softer economic data that we see coming through. Nothing to be too concerned about, but there is weaker economic data on the horizon, and what we've had previously has been weaker economic data. So it's something that we need to be mindful of. Let's see if I can find anything in the statement as well. Sorry guys, it's not where I want it to be. Where's gold? Interesting though that gold hasn't really risen that significantly, but the dollar's sinking quite significantly. Is it over for the gold buyers? Gold bullish, gold bullish, gold bullish. It's not that bullish though, or is it? It's starting to. I mean, it's quite clear what we see from the US dollar, right? Stock market is enjoying it on the whole. The stock market's enjoying this interest rate cut on the whole. That's no surprise. But it's a little bit cautious, isn't it? We've seen over the last couple of days the stock market has been a little bit cautious, and I think that is because there is concern about the US economy, and that's fair enough because there's been quite a lot of interest rate hikes in recent times. So I mean, that's understandable, right? Just reading some of the hello to you on X. Market taking SL on the gold side. Yeah. Yes, it's choppy. It's choppy. Right. Before we carry on, I need to give away some prizes because I'm going to run out of time. So I'm going to give away like 3 prizes now for those of you who are active on the YouTube stream right now. We're up to nearly 400 views on the stream, which is fantastic. Let's give away 2 lots of 10,000 Atmos funded challenges. Best get my notes up, really. Let's get notes up so I can write down who's won. So I'm giving away, I think, 12 prizes in total today. So we're going to give away 10k Atmos challenge now. And we're going to give away a 50% deposit bonus. 50% deposit bonus into Taurex. And we've got 22 minutes to go until the press conference from Jerome Powell, and I want to cover at least 15, 20 minutes of that. So good luck to those who are currently involved in the live draw. Fingers crossed for you. The first winner of we've got 222 entries. The first winner of our 10k Atmos challenge goes to Lucen Core, whatever your name is. Lucen Core. You've just won a 10k Atmos funded challenge. We're giving away 2 lots of 25k challenges as well, Deadly. Don't worry. You've won our first prize. Congratulations to you. Amazing stuff. Let me just write the name down so I've got it all written down. And then the second winner, which is our 50% deposit bonus into Taurex, that will be Yamil. Congratulations to you. Please, guys, drop me a message on X or Discord, and I will get the team to credit you those prizes tomorrow. Not tonight, tomorrow, if that's okay. And congratulations to you. Please drop me a message if you have won. Remember, any unclaimed prizes will be given away on X to you guys over there. Congratulations. Still loads more to come for the rest of this stream, so please stay on. There's plenty more prizes to give away for the remainder of this stream, okay? Okay, good stuff. Right. What should we do next? Let's look at the markets. So we have the US 100. We have the S&P 500. The Nasdaq down 0.4%, and the US 30 is down. I will try and place a trade live for you guys, by the way. Just waiting for the markets to settle a bit. Here goes gold. Gold has reached 3,700 finally, off of that fairly dovish. Decision by the Federal Reserve. Let me just answer some questions now. When was the last time you got a losing streak, and how did you manage it? Losing streaks come all the time, to be honest with you. If you want me to be honest, probably, and a lot of professional traders would be like this, is that you lose more trades than you win. But your risk-reward ratio allows you to be profitable over time. You know, if you've got a win rate on a strategy of, say, 35-40%, I'm really happy with that. Some of my back-tested strategies that I'm using bots for now, the win rate's something around 30%, and that's very, very good. And Nikhil, hello. What coach right now? What is your plan after the news? My plan is to wait for the markets to settle first, digest what Powell says. Probably, was it Thursday tomorrow? Yeah, we probably can get some trades in Thursday and Friday, depending on how Powell speaks. I really want to know if Powell looks more concerned about the US economy than what the statement says, because I think it's very important to take a look at that. I'm going to end the poll now, guys. 200 votes on there. Thank you very much for that. Now, okay, whilst you let the market settle down a bit, and it's quite clear we're seeing the weaker dollar story, cut rates, weaker dollar, all that sort of stuff. I want to show you something which I put together a few months ago, at the beginning of this year, when I thought that the Federal Reserve at some point we're going to see an interest rate cut. And this is a pivot point. This is the moment in time where the Federal Reserve is pivoting from, well, we had hiking rates, keeping rates where they were, and now we're at a stage where the markets, the Federal Reserve is now going to start to cut rates. It's a pivot in their strategy. Now, let me just read some of the... If you go back in history, right, typically we're trained as traders, economists, that when the Fed starts to cut rates, it's a good thing for markets. Don't worry about the chart yet, just listen to me. It's a good thing for markets. Why? More cutting rates means more liquidity into the economy. It boosts economic activity. It leads to higher equity prices, higher stock market prices, etc., and it creates inflation. That's correct, theoretically. But sometimes it's not that straightforward. Take a look at this chart in front of you now. This in the white line here, what you see is the price of the S&P 500 going all the way back to 1981. And in this purple line down here, that is the trajectory of interest rates from the Federal Reserve. Is there a correlation here? Well, yes, because that's why I'm showing you it. But I'm going to show you what that correlation is. Some of the biggest stock market crashes that have occurred in history, the biggest, have come after the Federal Reserve has signaled a pivot to cutting interest rates. Yeah? They've changed their strategy to lowering interest rates, if that makes sense. Let me show you what I mean. 1980, and by the way, before someone jumps down my throat on this, I'm not saying this is going to happen. I'm just saying it's an interesting thing to take a look at. And I'll explain why this is the case in these situations. 1981 to 1982, we saw a 27% fall in the S&P 500. Look what happened. Look where interest rates were at that point. Look what happened as we got the fall in the S&P 500. The Fed started to cut rates. Move across. 2000 to 2002, dot-com bubble. Probably all heard of it, right? S&P 500 falls 51%. When did that 51% correction begin, roughly? Right around when the Federal Reserve started to cut rates. 2007 to 2009, global financial crisis, probably the most famous recession that we've seen. 58% fall in the S&P 500. When did that start? Well, it started, roughly, when the Federal Reserve held rates for a bit, then pivoted and actually cut rates. Scroll across. The 2019-2020 35% crash, again, slight correlation here with when the Federal Reserve were gradually increasing rates, then kept rates held steady for a little period of time, and then dropped rates. Crash. I know that's COVID. Now, playing devil's advocate here, because all these times something happened in the global economy, dot-com bubble and COVID and all that sort of stuff, and times are different now. I get that. I'm not saying it's going to happen, but if you go to 2025, which is where we are right now, look how long we've had that period of interest rates being held where they were. Now is the time that the Fed cuts have begun properly. We thought we were going to get them last year, but we didn't. Now is the time where the Federal Reserve has shifted to cutting rates. Where is the S&P 500? Well, it's at all-time highs, obviously, as we know. If you go to the chart, Okay. For some reason, I've deleted the S&P. Well, you can do it on this, and you can see the reaction here. Now, I'm going to explain why that is the case. Where is it? Indices. Where's my S&P 500 gone? There it is. We go to today, and you see the S&P 500 is conveniently at all-time highs. Now, why did interest rate cuts create a fall or a crash in the stock market in history? It's because there's two situations in which the Federal Reserve can cut. Is it cutting because inflation's falling, it's injecting more liquidity, or is it cutting because the economy is, say failing, but is the economy falling in terms of GDP, in terms of economic data, in terms of jobs numbers, i.e. is there a recession coming? Because at the time when there's recession, that's when the Federal Reserve cuts, right? So is it cutting because things are okay? We've got a soft landing, inflation's falling, the economy is okay. If that's the case, yeah, stock market will love interest rate cuts. But if it's cutting as an emergency measure, which is basically to save the economy in a way, that is what the stock market won't like, because that is a signal to investors that we're in economic slowdown. In economic slowdown, stock markets fall temporarily. So when I conclude all of that, and I hope it makes sense, if it doesn't, you can ask questions. Rate cuts aren't bad in themselves. In fact, they can be great for markets. But why the Fed is cutting is the bit that most people actually miss when it comes to fundamental analysis. If it's because we've got the Goldilocks soft landing scenario, everything's rosy, great. But if it's because the economy's in trouble, not good. Not good. And that is why, potentially, right now, we see the stock market down 0.23%, the Nasdaq's down 0.6%. I know that the US 30 is up 0.6% as well. It's quite volatile in general. We're not going to get that clear direction yet, but it's just something that I want you to keep in the back of your minds. I'm not saying panic about the economy, because we're not seeing a recession yet, but the jobs data from the last two NFPs have been quite weak, to be honest with you, and that's giving some concern. So when it comes to just hit me elbow. When it comes to the Jerome Powell conference coming out in 10 minutes time, I want to listen to it, because I want to hear if there is increasing concern coming about the stock market, because then I'm going to sell it. No, but again, that's also good for gold prices as well, which is why I'm bullish on gold, really, in any of the situations, to be honest with you. Okay. Just going to go through any questions now. Just going to go through any questions now on the YouTube chat. Wow, lots coming through here. Stop spamming, guys. Guys, you only need to comment win once. Crazy gold indeed over on the X channel. Yes, indeed. You're welcome for sharing that information. All right then, guys. Two more winners coming up right now. We're doing it. We're going to start giving away. Let's start giving away. Okay, right. The next winner. This time, people, I'm going to give away 2 lots of 10k Atmos funded challenges and a 50% deposit bonus into Taurex. If you are a winner, please reach out to me and I'll reply tomorrow, I promise. So you can claim your prize. The second winner, of the 10k Atmos challenge is Arvin. Arvin, congratulations to you. You have just won a 10k Atmos funded challenge. The second winner of a 10k Atmos funded challenge is Fun with Saini. Fun with Saini, well done to you. Congratulations. You have just won another 10k challenge into Atmos. And we're going to give away another 50% deposit bonus into Taurex because we can. And the winner of that is Dollar Lover. Like that name, by the way. Dollar Lover, you have just won a 50% deposit bonus into Taurex. So by the way, the way that works is if you deposited, this is the max. If you deposited $500, we'll give you $250 on top into your deposit into Taurex. Dollar Lover. Congratulations, people. Still more prizes, guys. We've still got 3 more 50% deposit bonuses. We've still got 2 more Atmos funded challenges 10Ks. And we've also got 2 25Ks. So that's the big one. Who can win the 25K? That's the question. I'm going to be giving away a 25K Atmos funded challenge before Jerome Powell goes live. And you're welcome, Fun with Sunny. Congratulations to you. Congratulations to you. Okay. My people on X, any questions? How do I participate in the giveaway? Head over to the pinned tweet, or not even Twitter anymore, is it? The pinned post on my profile. Come over to the YouTube channel, the link. Come and join us on YouTube and comment win once, and it'll put you into the live draw, okay? Do that, and then you'll be able to participate in the giveaway. Man, it's hot on here. Okay, some questions coming through now. So, Kirkton, hello. When do you expect the market to start pricing in the next rate cut? Well, I think it's doing that as we speak, mate, to be honest, because you can see, obviously, this is the September meeting. If I refresh my page, and I'll answer that question as well. Is there any danger that the US dollar can go strong on the short term? Not obviously. Ignore that. That's now. We've had the rate cut. Wow. Did you see that? So we're currently in the rate between 400 to 425. Wow. The markets have now priced in a 93% chance of a rate cut in October's meeting as well. That was at 72% before that decision and before that monetary policy statement. So that is the market. That lower dollar, that was the market's pricing in the next interest rate cut. Interesting. Okay, so that's now been fully priced in, pretty much. Wow. And 92% that we're going to see another one in December. The markets are now fully pricing in 2 more interest rate cuts. I think that's what the dot plot said from the Fed. We're going to cover the speech live on YouTube. Here he is. Where is he? We're waiting for him. He's not here yet. We'll cover this live. Well, I'm going to go through. I'm going to be next to him. You're going to be able to hear it through my screen, through the stream. You'll be able to hear it. Okay, we'll cover that. We'll just give that. I know he's not going to come live for another 5 minutes, so we don't need to listen to that just yet. By the way, guys, I forgot to say, if you are not a winner of today or whatever, we do have our September promotion offer available now. If you scan the QR code on the screen using your phones, you can see all the links to my social media. So you're going to get notifications on my content, my educational content, but also follow me on there and you can get updates on streams and stuff like that. And also you'll see on there the link to Atmos using code Connor gets you, I think, 45% off of some challenges of the 5K, 10K and 25K, and 27.5% off of the 50K, 100K and 200K accounts. So scan that QR code. Drop me a follow on social media as well if you want. But the September promotion is available for you to enjoy. Yeah, and I suppose the question there is like, what are you looking for when it comes to the when it comes to Jerome Powell coming out in just a second? My tea's gone cold. What I'm looking for him to answer questions about the economy. You know, is he going to be concerned about the economy? That's what I'm interested in, to be honest with you. Is he going to be worried about what's coming up in the economy? And if so, look, this is an inflection point in the market. We're going to come back and remember this moment for one reason or another. It's the time where Powell started to, or we started to see economic slowdown, or it's the time where stock markets went crazy because the Fed started cutting and the economy remained strong. It's going to be one of those two things. 4 minutes left. Guys, I'm going to give away 25k right now. Let's go. Let's go. 25k giveaway right now. Let's not muck around. Let's not waste any time. The winner, the winner of the 25, or one of the 25ks into Atmos is, good luck, good luck, good luck. This is a big one. Roy's Traders. Why did I say Roy's? Rosier's Traders. Sorry. Rosier's Traders. 25,000 two-phase challenge. Amazing stuff. Well done to you. Drop me a message, please, to claim that prize, and I'll credit that for you tomorrow. Rosier's Traders, you have won the 25k challenge. Another 50% deposit bonus. Yeah, why not? $50% deposit bonus is going to Mamba Trader. You've won a 50% deposit bonus. Okay. Congratulations to you. Well done. I would ask winners to comment immediately, but the chat's going crazy, so it's just impossible for them. It's okay. They've got time. If the prize doesn't get claimed, then I'll roll it over. This QR code's too small. Is it? Make the screen bigger. It's there. Anyway, more importantly, guys, we've got Powell coming up. I'm going to try and be a bit quiet during Powell coming on. Okay. Let me know if you can't hear him. Let me know in the chat, please. I'm hoping that you can hear him, to be honest with you. Come on, Mr. Powell. Very silent in that room. Mr. Powell, Mr. Powell. I'm only going to probably listen to about 10, 15 minutes of this, guys. Just like the opening statement and like the opening questions, because that's going to be like the main thing that we need to really, really focus on. Vabav, I do apologise for the spamming on the chat. I will try and stop that going forward, okay? I'll try and set like a thing where you can only let you comment like once. I do apologise about that, guys. Some people get excited. Some people getting chilly. Two lads there getting a bit cold, getting their jackets on. Where is he? Surely this is dollar down from now till December. I mean, it's not exactly dollar positive, is it? It's not something that I really want to be buying, that's for sure. Deadly says use Google Forms for entering live. Spamming will stop. Oh, okay. Fair enough. Come on, pal. Is he coming? Where is he? Here he is. I've got him. I've got him. Let me know if you can hear it, guys, please.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments.
Ooh.
Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level.
Okay, it's not too bad.
Payroll
It's not too
job
bad.
gains have slowed significantly to a pace of just 29,000 per month over the past 3 months.
Dovish.
A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter.
Okay.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast,
Stock market's messy.
disinflation
still
appears
hear
to
it.
be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year, and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum
Quite bullish on
employment
inflation,
and stable
really.
prices for the American people.
Thinks
At
inflation is quite
today's
sticky.
meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived.
I'm expecting more downside in the US dollar, correct.
It is also possible that the inflationary effects could instead
More
be
giveaways
persistent,
coming after this.
and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging
Ooh.
situation.
That's
And our
stagflation.
goals are in tension like this. Our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks.
Okay.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median...
We just pause a second, guys. The reason that we're starting to see... you can hear me, yeah? Yeah, you can. The reason that we're starting to see the bit of a dollar pop there is, you notice speaking about inflation, in the fact that in the short term, we see inflation risks to the upside, but the economic risks to the downside. So, for me, that's not very good for the stock market. You know, and we're seeing now the stock market starting to make its move lower on the whole, but it has been moving lower in the lead up to the event. And yeah, I'm on a bit of high alert after that. And we'll continue listening to it in a second. But from what he said there, overall, it's like there's not too much to panic. Like, we don't need to panic yet. However, there are increasing risks to the economy, and we're well positioned to be able to act accordingly. So I think that overall, the thing that I'm taking from all of this is like a bit of a stagflationary short-term thing, which is where he believes that maybe economic data will fall in the short term, but at the same time, inflation may remain quite sticky. That's not good. I'm not going to place a trade today after that, if I'm being honest with you. I'm going to wait. This guy really is the end boss. Good stuff. Right, before we carry on with some of the, I'll go to maybe some of the questions that Powell has been asked. Let me quickly give away some more prizes because we can. So, how much have we got left to give away? I'm going to give away the remaining 50% deposit bonuses. So 2 more of those. And then I'm going to give away, how many more 10Ks have we got to give away, guys? 2 more 10Ks. And we've got a 25K to give away as well. Okay, dokie. Right, so the final chapter ends here. Yes, indeed. All right, then, people. So, same sort of thing. We're going to just do quickly 2 of the 50% deposit bonuses into Taurex. The winners of that are Forex 60 and Jackal Baby. Jackal Baby and Thor X60, you have won 50% deposit bonuses into Taurex. Congratulations to you. And give me a message and you can claim that prize. Now then, let's give away the remaining 2 10k Atmos challenges, and then we'll listen to a bit more Powell, and then we'll give away the big 25k, and then we'll call it a day. Yeah? How's that sound? All right then. So the 10k goes to Zephyr Trades. Very well done to you. You've won one of the 10k Atmos challenges. Drop me a message, and the second winner of that is Luffy Peace. Luffy Peace, hello to you and well done. You have won another 10k Atmos challenges. So that's all of our 10ks out for today, guys. We've got one more prize left. One more. And that is the 25k funded challenge into Atmos. So make sure you stick around for 5 minutes or so whilst we just quickly dive into the rest of what Mr. Powell's got to say, and I will do the last winner.
Participant projects that the appropriate level of the federal funds rate will be 3.6%. They're not a committee plan or to afford greater equality.
I want questions
at your meeting this week.
Here you go.
Are they larger than 20?
Suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point.
There was
cut
no
today.
support at
I
all
think
for a 50 basis point.
We've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's
in other words, if
I
50
feel,
basis
certainly
point
now. I feel
rate
like our
cuts start
policy has
coming,
been
that means
doing
we're in a
the right
recession,
thing
guys.
so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to, to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management
Kirkton,
cut,
short term
if you
probably
look at the
means like
SEP,
towards the end of this year.
actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think.
So the risks to inflation have fallen gradually since sort of May or April or whatever. But more concerningly, there is a significant call off in what we're seeing in the jobs market. Now, how do you translate that into trade ideas itself? Look, it's not surprising that we see, and this is why it's literally what I said before I came on, why the Fed is cutting is so important to markets, and why it's important to listen to these statements and listen to what Powell has to say, because, you know, the reason, not necessarily the reason we cut, but the sign, there's some signs there that we're cutting into a weaker economy, right? And we just don't want that to snowball any further. So there's no panic here, but it's not surprising that we see minus 1% on the NASDAQ right now. We currently see minus 0.7% on the S&P 500. We see a dollar index which is picking up a little bit, and that's probably due to the comments surrounding the short-term risk to inflation being higher. I don't think the market's probably priced that in. But look, I still remain bullish. I still remain bearish on the US dollar as a whole. But I think potentially, for the first time in a couple of months, I've now got my eyes set on this stock market. And I want to look at the data that's coming out over the next sort of, 4 to 8 weeks. Because if I see some more weaker data, I'm going to start selling the stock market, I think. The pressure is on Powell, of course it is. The problem is that he basically just said there, if he cuts 50 basis points or there's any aggressive move in policy, that's because they have to move policy quickly, right? So why would they cut 50 basis points? Because the economy's slowing down quickly and they need to move policy quickly. It's not good for the stock market. I still think there remains fairly positive for gold prices, but we do see gold now making a move lower, down 0.7%. That's because of the stronger dollar as a whole, really. But yeah, I mean, you do get the true move, guys. The true move of all of this won't be now. It'll be coming up in the next few days, to be honest with you. So, just as I like to say, keep your powder dry. Yeah. You don't need to rush into any trades like ridiculously like now. We can take our time. But my overview of that whole thing was this is the moment that the Fed shifted. Now, what we need to see in the next few weeks, in the next coming weeks, and if you keep joining my live streams, I'll keep updating. What we need to see in the next few weeks is, does the data back up the fact that we need more cuts? And if that is the case, that's probably not a good thing for risk assets like cryptocurrencies and the stock markets. Or will the data still be relatively steady? And can we now treat the interest rate cuts as positive for the stock market? For the US dollar, I'm going to let it sit out for a bit. Technically, I'm still definitely bearish on it, but I am slightly concerned about how we've priced in now, like 90% priced in 2 more interest rate cuts. So what else can be priced in? That means the risk to the dollar now, or could become, the risk to the dollar could be upside coming forward. End the day and tell us about the mentorship, coach. Now, yeah, look, the mentorship's coming, guys. I'm going to be having a fantastic course coming out. We're going to be releasing that on a episode by episode basis. Otherwise, you'll be waiting ages for the full course to come out in one go. So you can digest each episode as we go. And my full mentorship is going to be available. I don't know exactly when. I can't give you a time zone, but it's pretty soon. We're moving on it pretty quickly. That's going to include my strategies. That's going to include potentially EA solutions as well. So yeah, that's still very much on the way. Okay, right then. So the final winner, to end the stream on a positive note, the final winner of our live stream today, our Federal Reserve live stream, and the winner of our 25,000 Atmos funded challenge is WAP3 Verse. Congratulations to you, WAP3 Verse. You have won our final Atmos funded challenge. Very well done to you. Amazing stuff. Daniel, that does sound like a buy of the mentorship. Yeah, it's going to be good. And trust me, I'm not going to be charging ridiculous amounts of money for these mentorships, okay? So it's going to be affordable, but obviously one-to-one sessions and like the exclusive like small group of people I want around me, that's going to take a lot of time for me, and that'll be the most expensive thing. But look, overall, the majority of the course is completely free. I'm not charging thousands of pounds for mentorships. Golf, dude, advise me as a brother based on trading during interest rates. I thought I'd already done that in the stream, but overall, I would say, look, let the market settle. Let it settle. And we'll come back on Monday. We'll digest everything. And then it's go time. These markets will keep moving. The volatility is here. The volume is here to stay. Also, we're going to keep doing these live events, these live 100K events, if people want to do them. And the next one will probably be NFP or inflation or something like that. So we'll do a little bit more of a promotion leading up to it. But we're going to be doing more of these 100K giveaway streams, okay? As for now, we'll be back. I'll be back on Monday for our weekly preview stream. So that will be the time where if you come to that stream, we'll be doing a 20K giveaway again. But you'll also potentially get an insight into the bots that I've currently got built and trading with. And we're going to now have a full understanding and a full week to attack the markets when it comes to what's happened last week in the Federal Reserve decision. So that just leaves me to say, as I said, scan the QR code here, scan that QR code, follow me on social media, get access to our September promotion. It's now live. Of course, it's 17th of September, so you've got a few more weeks to claim those those discounts on Atmos challenges. And until next time, I do wish everyone a fantastic weekend. I'll be active in the Discord channels as well throughout the next few days, breaking down. And if I place any trades, I'll put it in the trade ideas section. Thank you to those on X as well for joining me. And I hope everyone has a fantastic rest of the trading day. And if you need me, I'll be on Discord. Trade well, trade safe, and I'll see you soon.